Hi, well, good morning all. Let's start the morning call with some fundamental update. Our markets did end up flat in yesterday's trading session. Although indices are stuck in this range, we do see mid caps and small caps doing relatively much better. But these are very ad hoc names that are actually doing well. It's completely a bottom-up market rather than any thematic or a sector rotation that can be consistently witnessed. Uh, of course, the pressure from from the international markets in terms of the bond yields, as well as rising issues with respect to credit ratings in US, is raising concerns for outlook for the equities as a whole. This is the key reason why we do not have much of a rally that is happening on the upside. On the other hand, we believe that there are not too many triggers for a very big downfall, although we still think 18,600 on the downside on the Nifty is still a possibility. Uh, but from a major drawdown point of view, I think neither on the upside nor on the downside we do foresee a big trigger. Yes, 400 points on Nifty is quite possible, but nothing beyond that is what our view is. Our stance here is that one needs to be focused on more mid and small cap, as indications from the indices level would be very limited. That as far as even earnings season is concerned, this earnings season was quite healthy. Nifty, in fact, reported EPS growth of about 32 odd percent in the first quarter, which was much higher than what Street was expecting at about 24% growth on a YY basis. Of course, it was a bit aided by the fact that there was a margin expansion story that played out in this year. Last year, what happened was that the top line growth was quite robust for most sectors, but for especially cyclicals and commodity linked companies, there was margin contraction that happened, especially in the second half of the calendar year. This year, although we are seeing margin moderating again, and there is an expansion that is happening in most cyclical names in terms of the operating margins, the top line seems to be slightly getting moderated as such. So it's a reverse story of what happened last year. As far as the sectors are concerned, IT reported weak set of numbers in line with what was expected. That was particularly driven by key weaknesses in the verticals such as BFSI and retail, which reported average median USD revenue growth of about 1.5%. Banks posted a decent quarter, driven by healthy loan growth. For most banks, the loan growth numbers were actually much better than expected. Sustained improvement in asset quality was a trend that we saw across the board. However, the margin trajectory did reverse a bit due to sharp rise in the funding cost, and that is where the disappointment was for even the larger banks, where the NIMs was slightly disappointing. Similarly, for NBFCs, most NBFCs, except for some of the housing finance names, they reported a sequential contraction in the NIMs. That was worse than what Street was expecting, uh, basically due to the higher cost of funding that is haunting them. Uh, as far as autos and cyclical names are concerned, they saw one of the highest amount of upgrades in this quarter, largely factors in benefit due to the higher gross margins and higher operating margins that they reported this quarter. Consumers' overall performance was a mixed bag. Few companies reported healthy volume growth, but other posted healthy value growth overall, which is basically driven by higher pricing for the most product or the new launches in the premiumization segment uh, for consumer sector. The point that I'm trying to draw here is that despite a very decent setup quarter, we still do, and an EPS upgrade on the Nifty itself of about into about 3 to 4 odd percent, yet the Nifty failed to actually do very well post the earnings seasons. What this means is that there was front loading of these expectations that already happened in the prices of the stocks and the sectors, and hence all the positive stories are getting discounted in the market very quickly. In order to drive the returns from this level, especially at the index level, I think it's a global situation that has to improve. which without which I think market would be a lackluster, at least at the index level, and the focus would be entirely on the bottom up opportunities. The top earnings upgrade that we saw in terms of EPS for the next year, some of the names which are notable are JSW Steel, Tata Motors, Dr. Reddy, Bharti Airtel, and M&M. These are the names which needs to be kept in radar. That is the area where you saw a highest amount of EPS upgrade both on FY24 and FY25 basis, especially when it comes to the large cap aspect. When it comes to the downgrade names, the names that needs to be kept in mind to be avoided, Tech Mahindra saw a 10% downgrade on the EPS. UPL, you had also a 7% downgrade in the EPS. Tata Steel, Apollo Hospital, and Unilever. Those are the most notable large cap names where you saw the most amount of downgrade that happened on the EPS, and hence they should be in the radar from an avoidable category list. As far as the opportunities are concerned, just watch out for Arcane Chemicals. I think the stock has already done a little bit well over the past few trading sessions, moved I think from 500 to about 575 odd levels. But I think there is a still 100 rupee play on this name. What is happening is that in China, the bromine prices, Arcane Chemical basically deals in bromine. It's one of the largest bromine producer in the world and largest in India for sure. They export 50% of their volumes to China and the rest 50 in the domestic market. Bromine play. Sorry, I don't know where the voice got lost, but I was talking about Arcane Chemical. And that stock is something that will be in focus for some time. The stock has done well, about moved up from 500 to 570 odd levels. That is because bromine prices in China has risen by about 35-40% in the last 4 weeks. And that's a key trigger for Arcade. This is the reason why the stock was actually not doing that well and witnessed quite a sharp fall. The bromine prices in the US were already doing very well. It was only the China, which is the largest consumer of bromine, where the prices were actually falling, which has now stabilized. And I think this will be a big trigger for a 103 even more upside move on the stock, despite the recent rally that has happened on Arcane. So Arcane Chemical is one name that one could keep in radar. As far as other names are concerned, we have also ideated rights as a preferred pick in a medium-term basis. And it's also again an interesting story here. Rights is a multidisciplinary firm in terms of the consultancy businesses, but they also aid the railways in terms of exports of rolling stocks. Now, this rolling stock business was not doing that well, and for the past 2-3 quarters, they have been reporting subdued numbers. What has happened is that in the recent con call, the management has said that they are receiving orders from a lot of African region, which is quite sizable in nature, about 400 to 500 crores. And this will drive the next quarter numbers over the next 1 to 2 quarters. I think that is where the earnings upgrade will also happen on the stock. The rights is again a second name that one could look at. Otherwise, we are being little sidelined when it comes to the large cap ideations. We are focusing more on the mid and small cap names, that to be very careful in terms of the recommendations that we are providing. Our view stands that there will be no sectoral leadership that will happen. In fact, these are micro sectors that will lead the rally and not a broader sector. For example, hotels have started to do well, and not the entire Horeca as a theme. My sense is that these micro sectors would do well, but there also the sector rotation would be very, very fast. And hence, playing a theme here would not be advisable from a client point of view. One could look at a very stock-specific bet within hotels. Also, a Lemon Tree or a Chalet hotel could be looked at. But again, this will be a very specific stock-specific recommendation that will happen, not a broader thesis. I'd like to stop here and hand over for the update.
Thank you, Nikhil. Good morning, everyone. This is Tejas Shah from Technical and Derivatives Desk. The Nifty gained 3 points over the day to close at 19,396 level. It started on a positive note considering global cues in yesterday's trading session. However, the first half was quite range-bound and lackluster as the Nifty traded in a 30 to 40 point narrow band after a positive start. And at the same time, marginal selling was witnessed during the second half of the trading session. It was clearly a day in favor of the bulls. The broader markets outperformed as compared to the mainline indices. The midcap index outperformed by closing deep in the green. Midcap index was up almost by 1% yesterday. India VIX witnessed a minor fall to the level of 11.75, down by almost 2%. The important key takeaway for Nifty is that Nifty is bouncing back from the lower levels for the past few days and is also holding above the major support zone of 19,250 to 300 on a closing basis. The candlestick pattern formed on the daily chart is not an encouraging one. The index has formed a dodgy candle on its daily chart, which indicates indecisiveness prevailing in the marketplace at the current juncture. FIs were net sellers in cash and index future segment yesterday. Presently, Nifty is finding support around 50-day simple moving average for the past few days, which is currently placed at 19,335 level. On the downside, the 50-day simple moving average is likely to act as a major support for the Nifty going forward. The Nifty index has almost formed a triple bottom on hourly chart around 19,300 mark in Monday's trading session. And we believe that as long as Nifty is holding about 19,300 mark, the present rally, which started recently, is likely to continue for a few more days. Broadly, Nifty is trading in the range of 19,250 to 19,550 levels for the past couple of weeks. And sellers are very strong near the upper end, that is between 19,550 to 600 levels. And buyers have repeatedly shown their presence near the lower end, that is near 19,250 to 19,300 levels. So we need to wait and watch for either side breakout or breakdown for 250 to 300 points directional move in Nifty. The best strategy at the current juncture is to buy Nifty at the lower trading range, that is around 19,250 to 300 levels, and look to book profits near the upper trading range, that is around 19,550 to 600 levels. On the higher side, the area of 19,550 to 600 has now become a very strong resistance zone, and we believe that unless Nifty does not close above the same, the current correction or consolidation is likely to continue for a few more days. Any immediate closing above 19,550 to 600 levels should bring back fresh buying momentum. On the downside, 19,380 is an immediate support to watch out for the Nifty, while the bigger area of support zone stands at 19,250 to 300 levels. On the higher side, immediate resistance zone for Nifty is at 19,425 to 450 levels, and above that, the next crucial resistance zone for Nifty is at 19,550 to 600 levels. Intraday supports for Nifty are at 19,365 and 310 levels, while intraday resistances for Nifty are at 19,435 and 19,495 levels on the higher side. Overall, we believe that Nifty is likely to consolidate within 19,250 to 19,550 range in the near term with a positive bias. Coming to Bank Nifty, the Bank Nifty was an underperforming sector as compared to Nifty in yesterday's trading session. Presently, Bank Nifty is not allowing the market to go higher, and we believe that any daily closing below 43,750 to 800 levels will indicate further weakness in Bank Nifty. On the higher side, we believe that Bank Nifty is likely to find the major resistance around the 44,000 to 44,500 to 44,600 levels. Presently, Bank Nifty is consistently trading below 50-day exponential moving average, which is currently placed at 44,483 level. The technical structure of Bank Nifty is relatively weaker than Nifty since the Bank Nifty also closed below the previous swing low of 44,280 for 2 consecutive weeks, which was formed in the first week of August. We believe that Bank Nifty would further outperform only if it is able to decisively close above the resistance zone of 44,500 to 600 levels on the higher side. On the downside, major supports for Bank Nifty are at 43,750 and 43,400 levels, while major resistances for Bank Nifty are at 44,100 and 44,600 levels on the higher side. Overall, we believe that as long as Bank Nifty is trading below 44,600 levels, the short-term trading outlook for Bank Nifty remains negative. On the sectoral front, we continue to believe that IT and media sectors are likely to outperform going forward. And our top picks in IT sectors are TCS Limited, Wipro, and Tech Mahindra Limited. Whereas in media sector, our preferred bets are Z Entertainment Limited and Sun TV Limited. Apart from these sectors, the other actionable ideas which we like technically for short-term trading purpose are NTPC Limited, ONGC, Dabur, Voltas, and Lupin Limited. Looking at the global screen and GIFT Nifty Index, we believe that our market is likely to open marginally lower by 20 to 25 points compared to yesterday's close. The stock that I'm recommending in today's Tech Trend report from short-term trading perspective is Voltas Limited, and I suggest buying the stock in cash market on a minor pullback in the region of 815 to 819 level with a stop loss below 795 for a short-term target of 845 and 870 on the higher side. Yeah, that's all from my end. I hand over to further updates.
Thank you, Tejas. Good morning, all. Jai this side for the currency and commodity update. The improvement in the US existing home sales for the July and the Richmond Fed Manufacturing Index for the August joins the overall positive US bond yields, and in turn it resulted into a bounce back in the dollar index. The US National Association of Realtors released data indicating a 2.2% decrease in the existing home sales for July. This, however, represents an improvement compared to the preceding month's figure of minus 3.3%. Concern about the de-dollarization at the BRICS summit currently held in South Africa to facilitate the diplomatic discussion among the Brazil, Russia, India, China, and South Africa gained little acceptance from India and South Africa, which is a positive for the sentiment for the Indian currency as well. Overall, if we look at the scenario, then the eyes would be on the Friday's event, wherein the US Fed chairperson will speak at the Jackson Hole, and everyone is looking forward to the same. Dollar index yesterday ended the day with a gain of 0.27%. Overall structure remains positive. We are expecting it to move towards 105 levels. On the downside, immediate support is placed around 103, and below that 102.45 levels. USD INR future fell towards 82.94 levels in intraday trades due to global cues for a weak dollar, but that was purely from an intraday perspective. As well as we have seen some dollar inflows along with the possibility of a central bank's intervention from the higher levels. However, a marginal bounce back was seen from the lower levels, and the USD INR future managed to end the day a tad above 83 mark. Currently, a very crucial support for USD INR spot is placed at 82.85 level. If it breaches and closes below that support level, then it will result into a false breakout from the consolidation phase. That would be a negative sign for the USD INR bulls. On the upside, resistance can be seen around 83.35 to 83.50 levels. The view is very clear until and unless USD INR spot is holding above 82.85 levels. Traders are advised to trade with a positive bias, but once it breaches that level, then one can turn the position on the negative side. On the commodity space, gold future ended with marginal gains. Overall, it is moving in a range from four consecutive days, and right now, a very crucial support from an intraday perspective is placed around 58,250 levels. On the higher side, resistance can be seen around 58,800. Silver future continued the positive momentum for yet another day. It bounced back by around 0.5%. We are continuously recommending buy on silver, and we maintain our positive stance on silver for a further bounce up to around 73,000 levels. On the downside, 71,300 is a very good support, and any dip towards the same shall be used as a buying opportunity. Crude oil fall by around 1.3% yesterday. Overall, it's moving near to its very crucial support of 6,570 levels. On the upside, resistance is placed at 6,850 to 6,900. Considering the overall setup, there is a possibility of a low risk buying opportunity at current levels. And to play the same, traders can buy 6,700 call option with a stop loss of 174 for a target of 240 to 260 levels. Today, many crucial data is there. Today, the manufacturing and service PMI is there for the Eurozone between 1245 to 130. Second day of BRICS summit is also there. In fact, for the US, flash manufacturing and service PMI is there at 715. New home sales data is there at 730, and crude oil inventory is there at 8 p.m. So that's it from the currency and commodity side. Now we are open for Q&A.